Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. I am here today after a week
Hussey.
away with Dan Hussey. Dan, how you doing?
Doing good, Joe. How about yourself?
Couldn't be better. Thrilled to be visiting with you.
Yeah, we missed you this week at Farm Progress and down at the Channel Fest in Decatur. We had a good time. Ran a panel with Ted Seifried, Karen Braun, and our very own Sherman Newland. Well, they're all our very own, right? So Zaner showed up down there, working with Ted and his partnership with Channel Seeds, being a market analyst for them. And we're checking out Farm Progress, which is a pretty well attended show this year. And honestly, blessed with really good weather, right? We don't have this like dog days of summer heat that would have just crushed a show like that. It's all outdoors, of course. So it was great weather, great show. And we had a good time in Decatur.
Usually about 98 degrees when a fella goes down to the Farm Progress. This time,
I would believe it.
Comfy in the 70s, huh? 70s?
Yeah, it was beautiful out. Mid 70s with that nice, breaking cloud every once in a while. So we were just standing in the sun. But no, great time. Got to meet a lot of folks, got to have a lot of good discussions about where the crop is through this kind of central part of the Midwest, and got to lead that panel and had a great discussion on what some of those findings from crop tour were, and then coupled, of course, with like, where does that lead us into this final hurrah?
Perfect for today, because we've got some big stuff to cover. As usual, we'll also be digging deep into the grain and livestock markets, especially, I think today we want to take a quick look at corn, technically, and maybe cattle. We're going to be trying to educate folks on how best to manage their risk and navigate these types of market movements. Dan, we saw some pretty interesting price action here this week in the grain market. Where should we, what do you think? You know what, Dan, before we start, if folks are looking for timely, concise commentary on the grain markets, they can sign up for Karen Braun's Zaner newsletter. If you don't know, Karen has been a figurehead in the industry for more than a decade. I'm pretty sure that everybody knows about Karen Braun that might be watching or listening. Over 85,000 followers on Twitter/X. No exaggeration to say that people really care about her thoughts. They want to know. You and I always say, I always joke that I don't know what I think until I hear what Karen says.
Until we've read her newsletters.
Now you can get her in-depth but easy to understand analysis straight to your inbox. The link is down below. It is quick and easy to sign up. We, as a general policy, Zaner Ag Hedge, very careful with your information. You provide your phone number. We'll give you a call and say hello to make sure that you got signed up for the newsletter. Also make sure and see if you want to get signed up for Ted Seifried's daily market update that he leaves as a recording every day about 2:00. That is also free with no obligation. And then maybe have a quick conversation and see what, if anything, there is that we can do to help you manage your specific risk for your specific operation. So feel free. It's a great way to get in touch with us. Great first step. And frankly, Dan, we can't overstate what a great deal it is to be able to hear from Karen and Ted daily like that. Wouldn't you agree?
Yeah, it really is. And to kind of bring that full circle at Channel Fest, we had a great discussion. And for those that are also interested, RMC is hosting an event in Lafayette. Those interested here can contact Kelly at riskcom.biz. That information will be in a comment section as well. If you'd like to attend that event in person or virtually, they have an Outlook meeting once a year for interested farmers and ag workers to go over the next year's marketing movements and discuss marketing strategies for the rest of the season. Zaner will be there in attendance, both Karen and Ted hosting a panel with Chuck and Sherman from RMC. September 5th, 9:30 to 2 p.m. at the Outpost Catering Center in Lafayette, Indiana. Lunch is provided. And again, Kelly at riskcom.biz. That's Kelly at riskcomm.biz. That information in the comment section as well if you want to attend in person or receive an email to attend virtually.
Not quite IU, but that other school there in Lafayette is okay too, I would say. If you had to make a choice, you'd probably rather be in Bloomington where IU is. But what are you going to do? They can't have everything perfect, can they, Dan?
Right. But they're going to have I think that's going to be a great panel. They've got 2 hours of talking points and discussions to go over. Not like a lecture, but a true roundtable discussion to engage with you folks and those in attendance. And of course, hey, lunch will be served as well. So keep
easy to get to
well
Lafayette
fed.
from anywhere in the Midwest. I mean, it truly hop and a skip, whether you're in Ohio really easy to get there. Terrific.
Yeah. So, yeah, well, without further ado, let's hop right into some charts. Remember, as always, when we're talking about things here today, that futures involves risk and is not suitable for all investors. And give Joe or I a call or any kind of market professional before taking that dive in to check them out. Where do you want to start today?
Yeah, I was going to say, pick a market.
Let's just do December corn.
These corn, the marquee market right out of the gate. Dan, I got to tell you, on a weekly basis for the week of 825, we opened at 413. The high was 420 and a half, low 403 and a half, closed 420 and a quarter. That's up 8 3/4 on the week, up 10 1/4 on the day, right? But 8 3/4 for the week. And heck of a move here today. That weekly chart shows that we have rejected almost all of last week's price action, which was kind of coming off a rejection of the attempt to get down below 390. Didn't work.
Getting a bit of that V-shaped recovery so far off of this contract low. So you love to see it. You do have to, at least respect some of the technicals. Still got some downward sloping trend lines. We had a little bit more of a parabolic kind of downward sloping trend line that broke, that moved alongside that 18-day moving average, which we finally now closed back above. We did last week as well. But this week we closed back above that 55-day moving average, conquering yet another technical back to the upside for corn. Do have to point out and play the devil's advocate here that we are overbought in that daily RSI, but we're seeing good building of buy side volume, right? So the participation that Joe and I always talk about, and we want to see on this type of move now back above certain technical levels. We do, though, and we'd be remiss if we didn't talk about the fact that we are running probably up into some resistance, that old support September and December through last year. The old contract lows that we're holding there into July that we eventually broke down and through. That's going to probably be resistance back around this 100-day, around the 430 area on the way back up. Got a little bit of a trend line. Trend lines are made to be broken this late in the term, but some of those prior lows are definitely levels I'm paying attention to. So if you haven't done sales yet and you're looking to do something, those are good levels to start scaling stuff off at or think about on the way back up here. Just a call to action for those that might be undersold here into harvest.
Coming into the day, funds short, according to our friends at ADM, who try to keep track of that every day, funds short about 134,000 contracts. And I think that's the lowest short that we've seen from them, the smallest short position we've seen from them in a while. Maybe folks want to fact check that. But my feeling is that they have been kind of on a short covering turn here. Fund short covering, increasing volume. We had some questions today about whether this was an adequate volume day. It certainly turned out to be the case. And Dan, this is set up so perfectly from a technical perspective that I want to remind everybody, if they're familiar with Peanuts, the Charlie Brown show, Charlie Brown and Lucy, from time to time, Lucy will say, "Hey, Joe, come on out here and kick this football." And every time we find ourselves here, Dan, sometimes I can drag you along with me, or sometimes I just do this by myself. I get all bulled up off this great technical move and the fact that the funds are covering shorts. And in this time, it's even more prominent price action, because we not only did we blow through the previous high from the other day, we're well above the 18, blew through the 50-day. We also, I'd like to point out that we took out the high from the 1st of this month, and we're knocking on the door of the high from July 24th. 423. We didn't quite get there today, but some stuff that should have been some pretty stout resistance is now in the rear view mirror, which normally would have me jumping up and down. But this corn market and these funds, long about now, somebody shows up and starts selling into this, and down we go. Of course, this time could be different. We've got some things going on out there. A lot of talk about rust, a lot of talk about maybe when you get into certain fields, maybe the impact from these challenges, wet corn, newly arrived disease that can be very impactful very fast. We've got some smart folks at RMC that were kind of putting on a clinic this morning about how quickly some of that stuff could impact fields for folks that were maybe late planted. But set all that stuff aside and look at this price action, Dan, and what is driving it. It looks to me like the fund trader is sponsoring this rally. What do you think?
Yeah, I think that there's a lot of truth to that, right? They're getting out of the way if they were the big short and leaned into this now, right? I don't think with how heavily sold, right, the farm, or undersold the farm is at this point, just in conjecture and things that we've spoken to, guys that we've spoken to. But generally speaking, like, I think survey says we have an undersold situation potentially into harvest. that means that the farm hasn't been coming back and owning this crop, right? So it's only been fun covering to that extent at this point. Now, that doesn't mean that some people haven't come in and aren't thinking about layering in those early calls to like kind of pre-sale or get ready. But Texas hedging, as we'd call it, in this type of environment, can get really hairy really quickly, and you don't want to be throwing pennies into the wind.
On the Lucy side of the game, I think that funds were short, farmers are undersold, and that means that your end user, in my opinion, is likely underbought. Some spots in this country sort of short on corn, even though we've heard some testimonials to the contrary, and that we have adequate carry out. Maybe the spreads suggest that there's adequate supplies, but in some places a little tighter than others. And so if the farmer is undersold and the funds were short, but now they're covering, your end user could possibly get a little jumpy here. Somebody's going to come back to them in December and say, Bob, did you have a chance to buy corn below $4? And you didn't? And what did we pay for it here? Could be that if this continues to feed on itself, these guys may be buying corn a little bit higher than 420, I would think.
Yeah.
But
and mentioning the spreads there, I did want to take a quick look here at these July to point out that, we have been in a theory building market here, right? There's no inversion to be had here. The carry has been built into this market. And like Joe said, is there a reason to build in more? Are the funds saying that there's a bearish potential here? Well, that's been the downtrend. But you can see here how the last few days, they've started to maybe make this a technical kind of move higher too, right? So that technical short covering is poking its head up into the spread markets right now as well. But got to play devil's advocate and also point out that, hey, this market is a long ways to full carry if it really wants to bear down. But for the time being, it does seem like that short covering rally, the nature of I don't want to say the bottom is in, but hey, we're seeing in more places than one a little bit of a turn that could benefit the market higher.
If I was a farmer and I had a lot of corn yet left over from last year, I'd be paying very careful attention to this rally.
Absolutely. November beans?
How about some beans? No beans. The week of the 25th, we opened at 1057 3/4. The high, 1061 3/4. Low, 1039 3/4. Last trade we saw was 1054 1/2. That's down 4 on the week. Decent volume there. I would say you look at that weekly move, and we come up off of that 1040 and close at 1054. Kind of a moral victory. We certainly would have liked to seen a close out above last week's price action. But for the last 2 weeks here, we have come rather far, and a week or week and a half of consolidation probably in order, would you say?
Yeah, really impressive actually to see how well we've held on to strength here in soybeans. You want to see that momentum, though, carry us through this really very, very strong resistance that begins at the 1080 area, and I would say goes for 40 cents up towards 1120. That area has just been capped the market going back a whole year now. So you've got to be aware, right, that in theory, above 1080, we're starting to get back into, like, I don't want to say uncharted territory, but you're so far out, right? You got to go back over a year for somebody holding contracts above, right? Holding on to momentum, though.
Funds only short 8,000 contracts here. I think they have been on kind of a short covering jag as well. And the chart shows that, right? You were getting ready to say that we got some work to do to get out over 1060 before I interrupted. My apologies.
No, that's more or less exactly right where I think it leaves us, right? Okay, moral victory on the week. We didn't give back the gains from this week, the last week, or the week prior, right? The month of August has been bullish for soybeans so far, and that nothing has changed about that, right? But we got work to do to get out over 1060. You do, and I do think you start to see it hold above 1060 and pressing towards 1080. You've got a real reason that this market could turn higher, and there could be a potential move in short covering rally. But until then, you're still just in a range, and it's hard to ignore that here on the larger time frame.
I feel like we say this often, but the funds are really going to have to sell here pretty quick if they want to put a cap on this rally, right? We've been short covering in both corn and beans. You can see it, like there's a visual representation of that short covering on these charts. And then normally after you and I get here and I infect you with the bullishness, funds show up and start selling hand over fist, and back down we go. But these funds are not yet showing that, and they don't really have much more time. We get out over 1060, this is going to be something, huh?
Yeah. Right. Think of how long it's spent below price. Just in theory, we should have a period of price discovery above. That doesn't mean it has to stay there, right? It can sail and fall back into the old range. That would tell us something too. But hey, the narrative will build in that direction, and we'll continue watching it here until it doesn't. And the very short term, though, watch that 18-day moving average. We've had a bullish crossover of the 100-day, 55-day, and 200-day. There's not much else to talk about with those. Those are just clumped up here in the middle of the range.
I was just going to say.
And what can you do until we start to see them spread? But you like to see at least the shorter time frame ones start to move back above those longer time frame ones, suggesting, okay, the market is starting to build or move momentum. I'm watching a little channel here in the short term as well that we've begun after this kind of bull flag or pennant began. Channel resistance suggests that we would stop out somewhere around 1070 to 1080. But, this is the type of area where you very well could have a very sharp breakout and acceleration higher. I'm not calling for that per se, but beware. What I don't like about soybeans that we don't have in corn is this loss in volume. We have just diminishing volume for the last couple of weeks, and you don't love seeing that back up into the high end of range because it can suggest we're running out of that momentum participation and the buyers are getting weary. So if we see a volume push above those levels, right, the things that Joe and I like to see are happening. Good. The narrative is now suggesting that move higher could be underway. Continuing to lose momentum, though, into this area and loss of volume, we might just roll back over in the same range we've been in. So
one thing I would point out is that we could change the word weary to wary, right? Your sellers here, aggressive sellers, might be sneaking to the sidelines in anticipation. We are in a period where the Chinese should be taking beans for us. I think somebody correct me if I'm wrong, but
you're not wrong.
We're in the export window. And so it could be that you get some sort of 11th hour trade related victory here politically in the US, and certainly a shot in the arm for the American farmer if they can make something happen. And so might not be a tremendous amount of conviction on the short side. Buyers that needed to buy are buying still hand to mouth, sort of waiting to see, not wanting to get overcommitted with no announcement being made. And so there's maybe a bit of détente or a standoff there here in the terms of price discovery, and the participants who fuel that price discovery maybe sitting on their hands waiting to see what's going to happen. You think that's possible?
Oh, I think so. And I think that's probably true in a lot of places in the market right now because volatility has been up. And those participants can be the fund category. They can be, right, commercial interest. There's a lot of reasons why a lot of people might be waiting in the wings to participate here. And I think you'll see more people queue in to participate as just things get less choppy and more dynamic, right? You get out over these levels, you're going to see that participation come in. It fails, it doesn't, right? Those all tell us stuff. And Joe and I are always trying to harp on the idea that there's a narrative here that we can discuss about, and we can game theory out what all of these participants might be doing and when they might want to get active, right? We'll see, right? We're seeing volume come in and participation pick up on corn. I don't think it would take very much to get people excited about soybeans either. But like you said, really worried about that export demand and what China has to feed themselves with. But Karen did point out and has routinely pointed out in some of our discussions, to go lean on some of her data points, we've seen some really strong demand for American agriculture from the rest of the world, right? Minus China, we're actually year over year higher on demand for both corn and soybeans. And actually, we are at record demand for corn. So it is a really cool thing to see that. And I think that's where the market's kind of queuing in here. Well, while we might have this massive supply and a huge production season for the United States, demand's actually been strong and might be curbing some of that pessimism out of the market.
Absolutely. If we can jump over to wheat.
For sure.
In December, we opened the week 527 3/4. The high was 535.5. The low 520 1/4. Closed last trade 534.25. That was up 7 on the week, up 5.25 on the day. Here again, feel like we have been here before, but positive price action to talk about here in the last couple of days.
Yeah.
And on this chart, a couple things that catch my eye, and I don't want to step on your work here, Dan, but you had a low last week, right? And we rejected that low yesterday. We could not get down below 520, and here we close at 534, which is not
a little bit
quite
of
exactly
divergence
breakout.
right there. Good look.
Yep.
Rounding bottom, if you will.
Volume says okay, not quite increasing volume, but not heavily decreasing either. Wheat is another market where it's just been so beat down. What do you got to do to convince people to get back in this?
Closing out over the 18-day and 20-day moving averages are good starts, right?
Not a bad
highs
look,
of the
right?
week. Yeah.
Not a bad look at all. So they say that funds are short about 94,000 Chicago wheat, and memory, I can't decide if that's a short position that's shrinking. I think that it is. Maybe we double check on that, but the 94,000. So we come into the day, you have to guess that some of this price action is short covering. If we can get some sort of breakout here, wheat is kind of a pile of kindling and old dry pallets and scrap wood that's been sitting around in the heat for some time. You wouldn't be surprised to see this thing catch on fire and head up toward 560. But
and you're not wrong, right? Like anytime wheat just decides to turn, like let's use that May low, for example, and not even May, like even one of these minor lows, like it can pop off for a quick 30, 40 cents in a hurry. And it's already kind of started that. But yeah, really quick short covering rallies, even in a bear market, aren't out of the question. And this time of year, right, is certainly a turning point for when markets usually try to decide that. Kind of break that very aggressive downward sloping trend line. So you're starting to see buyers build back in. You're seeing that participation. We're overbought here. I don't think that's necessarily a reason that you be a seller. I think that's also a signal of like, an imminent short cover might be in place, like a reason for the market to pop might be underway. But I really wanted to see it get out over this 535 area, the highs of the week, because you're still just stuck in this little bit of a wedge or structure down here. But like you pointed out, Joe, you got that divergence.
For sure.
Sellers weren't able to actually make and continue progress lower. So that's what this week was. You had several weeks, a couple months of downward progress, day over day, week over week, a month over month. Today was a change of that. Today was progress actually higher week over week and day over day. So, okay, maybe we can build in at least some optimism. I would definitely, from a trading standpoint, you start to get over 535. There's plenty of room to run back up to that 50 to 55 day moving average area around 553 and that 100-day around 565. And eventually, wheat loves to go back and test that 200-day. It's just a matter of time, I think, before you get that short cover, a reason for 90,000 funds to cover out. I think that's the type of move that would take you all the way up to 585. If you saw a complete reversal in that fund short, what does it take to cover out 90,000 contracts? A 50, 60 cent rally in wheat might do it.
Your lips to God's ears. How about that? Wheat's overdue.
We'll see. It is. It really is. It is.
I'll tell you, if I can jump over to feeder cattle.
Let's do it.
Open the week at 358.22.5. High was 369.37.5. High drama this week in the cattle complex. Low 353.25. Last trade 364.47.5, which put it up 197.5 for the week, 295 for today. And what do we got to say about feeders? I mean, so what do we have? Just a quick recap for my purposes. Earlier in the week, screwworm, never going to be good again. First American case of screwworm, a new world screwworm.
Traveler to Guatemala, I believe.
Yeah, exactly.
A jungle adventure, had nothing to do with cattle markets or cattle at all, right? But the sheer factor of screwworm infecting humans is enough to make me queasy. So
every news outlet, whether it was television or emailed news or the Facebook news or any kind of
very hard to make that the story, right?
If it was a drinking game, every time we saw a picture of worms, we'd have been wasted, because that was just a scandalous. Yeah, exactly. That was just a scandalous display of modern media.
Actually, we might have just invented a tequila drinking game.
Yeah, with the worms, no pun intended.
It's
scandalous display. Of course, obviously, as reported, no new reported cases of this most recent challenge to American animal production. They're battling. It's certainly a noble quest down there, right? What were you going to say, Dan? Go ahead.
Well, I was going to say that there was also now reports of like a 60% increase in cases in cattle in Mexico. And that's actually in the short term, you might initially you might think, oh, wow, that's bad, negative for cattle, kind of like mad cow disease. But when you step back and think, oh, wait, that's just another reason to keep the border closed, to keep less animals from making their way into our markets. The only way we're going to get out of this situation is breeding. And I think we all know that that's not happening anytime soon. So
you see that
very high prices.
What you just described, you can see graphically on the chart. Now, certainly a bit of a negative reaction on the open that day. Buyers came in and quickly overwhelmed that nonsense media gambit.
Almost limit down at one point, not quite, but we got within. They could have took it if they wanted to.
Moments later, buying surfaces, and everybody says, if you're willing to sell it down here, we'd be more than happy to buy it. Back up we went. 2 days later, new high. Yesterday's price action based on this, from what I understand, this August contract going off, rather negative yesterday. And then today,
I mean, you're at 360, 370. You got to expect some pullbacks.
Absolutely.
Nothing goes in a straight line, right? But yesterday's or 2 days ago's close did look like that spinning top or that potential reversal type structure, right? Met with a lower low and a lower high. Today was kind of the not today, not just yet, folks. Close, in my opinion, right?
And so same story here in the fats for the week. Open 235.50, high 242.07 and a half, low 233.52 and a half. Last trade we saw was 239.65, up 177 on the week, but 272 and a half on the day. And cattle market it's the same story there in fats, isn't it, Dan?
Yeah, and even a stronger, I feel like, close to the fats, because if you look at this volume here, we actually upticked in volume. Yesterday, we had diminishing volume on a down day, and then you increased volume on an up day that almost closed above yesterday's high. I mean, yeah, this was the market completely saying gotcha to the bears, in my opinion, to close out the week for cattle.
Yeah.
Feeder cattle, you could see here the same idea. Finishing strong with strong, actually some of the biggest volume, one of the biggest volume candles we've had for October feeders as well. So yeah, we can't argue that the participation is still there. It's an uptrend until it's not. I think we can all agree at some point there's going to be a top, right? And it's going to be probably pretty violent when it eventually wants to happen. But fundamentally, there isn't much reason to think it's going to happen here and now. Graphically on the chart, we're seeing the same thing.
And that's how these things work. And I likened it.
Yeah, it's a bull trend until it's not, right? I mean,
cocoa is a fine example, right? You look at the cocoa market all last year or whenever it was just on a rampage higher, and you think, okay, well, something's going to fix this, and we're going to drop down. And the fact was they just didn't quite have the cocoa, right? And so,
I'm wondering if I had it quickly here to throw it up. Do I actually?
You couldn't really arrest that trend in a meaningful way until the supply situation changed. And interestingly, this week, you see some discussion, I can't remember what beef market periodical it was in, but some discussion about the idea that this isn't so much a supply-driven rally, but it's a demand-driven rally in the cattle complex that is being exacerbated by supply challenges. And I had not thought of that. That certainly is an interesting take. We've seen really decent exports. We've seen they've tried to ding this box beef market. We've had some product coming in from south of the border. The box beef market turned a week or so ago, but here we are back again. Really solid box beef numbers. And so cash cattle trade, record cash feeder trade, box beef cruising along, exports cruising along. There really isn't anything here, like you say, in terms of known fundamentals. Somebody used to lecture me when I was a kid, known fundamentals are useless fundamentals. But this is a rather big boat to turn, and you just can't, at these prices, you think that whatever mitigation could take place, animals coming from other locations, folks may be finding some stuff here and there, but even that, you want to wait till you see that on the cattle on feed. So if something changes this cattle market, it's going to be from way out in left field in black swan territory. And not to say that can't happen, because we live in a black swan time, right? But
it's hard, right? It's hard to imagine, right? Where do you find animals, right, to quell this type of demand? When you hate to say it, well, what's the nasty thing, the other ways that you take the wind out of these sails? And we'll see.
For sure.
But at some point, I think the margins and everything else and non-feed demand, like you said, things will course correct. And we'll probably at some point realize, oh, we've gone too far to the upside, right? And things will need to normalize. Genuinely, markets that go on big run-ups like this now at some point want to go and find where that true support is from demand once the run-up is over. We're not there yet, and we'll take it one step at a time and continue to monitor this trend until, right, there's a reason to think it's over and going the other way.
For sure. For sure. Couldn't say that any better.
Well, I don't know if there's another market that we need to take a look at or discuss this week. We got a question from our producer, Carter.
Question of the week.
What hobby or skill have you wanted to learn but haven't? I'll let you start with that, Joe.
Oh, geez. That's a tough one. That is a tough one. I have very much wanted to learn how to surf well. I can surf badly, but I would like to get good at that.
I want to join you on that. I don't even know how to surf. So let's yeah, I would do that.
I was very gung-ho about learning how to surf and had spent some time out on a board in the Great Lakes. And the joke is everybody knows you can't surf in the Great Lakes, but lo and behold, you can. And I went out one evening to maybe try and surf some waves during Hurricane Sandy. And the waves on Lake Michigan were so large that I put the board immediately back in the truck and just sat.
For those at home following along, the reason where Joe actually lives is on that southern part of the lake, and you legitimately will get north to south winds that run the entire lake that build some impressive waves down on that southern shore. For those that don't know, and Hurricane Sandy, when it came through, it gave that spiraling wind pattern that pushed wind straight down the lake. I remember I saw a news story about people surfing out there, and that's how I know what I know about it.
I grew up on what they call the South End, just on the other side of the steel mills and the oil refineries, and we spent a lot of time swimming in that lake and swimming in those waves, and never in my life had I seen anything that big. It was pretty incredible. I know people that came back from vacations down in Mexico, cut vacations short to get back and be out in that stuff, but it was too much for me when you see that stuff rolling through there like that. I don't know how those ocean guys do it, but that's what I'd like to do, is maybe go down to where the screwworms live in South America and see if I can't get some lessons one of these days.
And so I'll piggyback off your idea of I formally began getting my pilot's license back when I was in college, but I would love to finish that. I've got some hours and stuff, but never found the time to be able to go and finish that off. I'd love to be able to do that. So
that's a really good one.
Well, thanks for listening us here on the Zaner MarketCast today. If you need more, just because you can't get enough of us, you can follow us on Facebook, Twitter, and LinkedIn at Zaner Ag Hedge. Also, you can get our daily market commentary by signing up for the Zaner Ag Hedge hotline, hosted by Ted Seinfried, our chief market strategist. This is a free hotline. It gives you access to his insights every day and a chance to hear from us and connect with us personally. If there's any questions you want answered on the show, leave us a like or comment in the comment section below. And thank you again. Be sure to like, comment, and follow along with the podcast and not miss a beat. And we will be back with you as price action develops. Take care.
Have a great long weekend, everybody.